and welcome to Module 3 of Making Money with Forex, brought to you by Raven Glen. My name's Peter and I'll be your guide for this section. This module is all about making your first trade, and in it we'll be looking at pips, which are the units of measurement of the trades, what sort of bet sizes you should be looking at, how to open and close your simple trades for both profits, and also, when the occasion does arise, how to make sure you know how to put a stop loss to limit your exposure, and we'll be covering the issue of trailing stops, which are quite a useful tool as well. So without further ado, let's get into this module. We've already discussed that when we place a trade, we're actually placing a bet on the direction in which an exchange rate between two currencies is going to move, and what we have to do is to establish some form of unit of measurement to calculate that movement, and that's given the term a pip. So basically it's a unit of measurement to express the change in value between two currencies. Now, each currency has its own relative value, so it is necessary to calculate the value of each pip for that particular currency pair, and the value of a pip in monetary terms will be different for each particular currency pair. PIP actually stands for percentage in point, and it is the smallest commonly quoted change in exchange rates for currency pairs. And all major currencies except for the Japanese yen pairs are priced to 4 decimal places. The Japanese yen currency pairs are placed in 2 decimal places. So ignoring the Japanese yen pairs for a moment, in each case a pip is 1 unit of the 4th place after the decimal point, or 1/100th of 1%. It is important to note here, however, that some brokers and trading platform providers, including GKFX, do actually show the exchange rates down to 5 decimal places, but whether there are 4 decimal places shown or 5 decimal places shown, the important thing to remember is that a pip is actually based around the 4th decimal place. So as an example, if the currency pairing of sterling against the US dollar is being quoted at trading at an exchange rate of 1.5000, or in other words, £1 sterling is worth 1.5 US dollars, and the rate then changes to 1.5010, then the price ratio increase is said to change by 10 pips, or 10 units of the 4th decimal place of the quoted example. And this can be seen more clearly from this screenshot, which over a given period of time shows the change in the exchange rate between sterling and the dollar from point A at $1.57150 to the pound down to point B at $1.56910 to the pound, or a change in 24 pips, or 24 increments of the 4th decimal place. So spread betting actually involves the betting of a specific amount per pip on the movements in the exchange rate. In the example we've just looked at, the sterling dollar exchange rate. So you can select how much you want to stake for each pip in the exchange rate movement. So for example, £1 for each pip, or £5 for each pip. And the stake, in this case the £1 per pip, is called its volume. It's now important to understand that how much you should actually bet or stake on each particular trade. Now, the bet size or the volume really depends on how much equity you have in the account, and it's important here to stress that it's the equity that you base it on, not the balance. Now, for our particular trading methodology, we normally use around 0.0006 of our equity, or 0.06% of our current equity. So if, for example, you had £2,000 equity in your trading account, this would equate to £1.20 per pip movement that you would bet. So what you could do is place one bet of £1.20, or if you're the sort of person who wants to make multiple bets, you could consider 3 individual bets of 40 pence each, and we will discuss multiple bets later on in the modules. Now, the exchange rates between the currency pairs are always quoted with 2 prices shown. There's a buying price and a selling price, and these are also known as the bid and ask price, or sometimes the bid and offer price. The difference between the prices is known as the spread, and this may be fixed or variable depending upon your broker. With GKFX, it's normally 2 pips for the sterling dollar currency pair. Now, as with most things in life, if we're buying something, we have to pay a higher price than we would receive if we were selling something, and Forex is no different. So when we open a buy bet, we have to pay the higher price, and when we open a sell bet, it's the lower quoted price that's applicable. And the broker actually make their money on the difference between the 2 prices. The spread can be seen more clearly and visually on this screenshot taken from the charts, and you'll see there are 2 horizontal lines. The lower one, which is normally grey by default, is the selling price, and the higher of the 2 lines in red on here is the buy price. Now, if your system is only showing 1 line, then refer back to the section in module 2 on setting up your MT4 platform. Now, we've included this chart here which shows the maximum collective volume sizes that we recommend you have open at any one time, so you shouldn't really exceed these figures. So for an account equity on the left hand side, for £500 equity for example, reading across the figure on the right hand side, you should have no more than 30 pence worth of total volumes of buy or sell bets open at any given time. Similarly, if you have £5,000 equity, then you should have no more than £3 worth of open buy or sell bets at any given time. Now, before we actually look at a trade being placed, this is a screenshot of the key areas of the trade window. Now, you can see at the top we have under the symbol section, we have the currency pairs that this trade is applicable to. We then have the volume section, and then the order type. Now, for the time being, we're just going to use the instant execution type, so you don't need to make any changes there. We then have the 2 figures for the selling and buying price, the sell price being the lower of the 2, the buy price being the higher on the right hand side. And underneath those we have the buy and sell action buttons, the sell button indicated in red and the buy button indicated in blue. And it's worth pointing out here that the difference between the buy and the sell prices, you can see a variation of 2 pips between the buy and the sell price, that being the spread that we spoke about earlier in this module. So the following section will actually show you a video of a trade being opened on the demo account, and we'll be pointing out the most important parts that you need to look out for, and this will be for a sterling dollar Forex pair. So the chart in question shows the 1 minute time frame, and you can see that the Bollinger Bands are shown, the upper, lower and middle Bollinger Band markers. And we then right click on the chart area, select Trading, New Order, and it opens up the Order dialog box. And on the left hand side you can see that there is a tick box which shows the instantaneous movement of the currency pair, and over on the right hand side you can see we have the symbol set, which should show the sterling dollar indicator there. We have the volume, the pull down selection, and we're going to select a volume of £3 per pip for our trade. You have the stop loss and take profit areas, but we'll come on to that later. And then you have the order type, and we'll select the instant execution for this particular order. Here we have the bid and offer price of the currency pair and the sell and buy buttons. So we simply click on this one, we'll do a sell trade. So we click on the sell button and that delivers our execution. It tells us the order number the OK button will take you back to the chart where you see there is a horizontal line drawn at the point of the entry of the sale. So we can now monitor from the screen the ups and downs of this particular trade. And you'll now see at the terminal section at the bottom of the screen the order number appears with all the details of the trade, the time you opened it, the price, whether it was a buy or sell trade, if there are any stop loss or take profits in there. It also shows you the instantaneous profit on that particular trade and your cumulative